Today, Bitcoin retreats to the $48,000 level a day after crossing $50,000 for the first time in more than 2 years. Franklin Templeton enters the Ethereum ETF race. And Bitwise CIO Matt Hogan joins Rick Edelman of the Digital Assets Council of Financial Professionals to discuss the popularity of Bitcoin ETFs from the Exchange ETF conference in Miami Beach. Welcome to CNBC's Crypto World. I'm Tanea McKeel. Bitcoin falling below $50,000 after breaking through that key psychological level yesterday, at one point reaching its highest level in more than 2 years. As of noon Eastern, Bitcoin traded around $48,500 after hitting more than $50,300 at one point yesterday. That's the highest level since December 2021. That move pulled most of the market lower, including Polygon's Matic token, which dropped more than 1% to 85 cents. Ether outperforming, however, rising nearly 2% today to the $2,600 mark. A hotter than expected January inflation report really driving things today. That came out early this morning, sending the benchmark 10-year U.S. Treasury yield higher and pressuring risk assets. Meanwhile, ETH price getting a lift from further developments in a potential ETH ETF, which we'll discuss later, as well as its upcoming tech upgrade and renewed interest in NFTs. Okay, let's talk about the top stories. Michael Saylor, MicroStrategy's co-founder and executive chairman, discussed Bitcoin's moves higher on CNBC's Closing Bell Overtime yesterday, when the cryptocurrency was trading above $50,000. He argued that the recent rally is indicative of the popularity of Bitcoin as an asset class.
There's 10 years of pent-up demand. People have been waiting for these ETFs, and finally, mainstream investors are able to access Bitcoin. And I think that's what's driving the surge of capital in the asset class. And initially, there was a rebalancing as people were moving capital between the futures market and the miners and MicroStrategy and the ETFs. But following that rebalancing, I think the assets found its footing. And now people are beginning to realize that there's 10 times as much demand for Bitcoin coming in through these ETFs as there is supply coming from the natural sellers, who are the miners.
Next, the sentencing of Changpeng Zhao, also known as CZ, has been postponed until the end of April. That's according to a notice in Seattle federal court, which didn't explain what caused the 2-month delay. The former Binance CEO is a resident of the United Arab Emirates and has been ordered to stay in the U.S. after pleading guilty on November 21st to a charge of violating anti-money laundering rules. He is currently free on a $175 million bond. Federal sentencing guidelines suggest a maximum sentence of 18 months in prison for Zhao, but prosecutors have reportedly considered asking for a harsher sentence. CZ's lawyers declined to comment when asked about the postponement. Finally, Franklin Templeton has joined the race to launch an ETF tracking the price of spot ETH. According to an SEC filing from yesterday, the asset manager applied for a spot Ether ETF, joining BlackRock, ARK21 shares, and VanEck, as well as Grayscale, which is seeking to convert its existing ETH trust into an ETF. The SEC is due to give decisions on those applications in May. The development comes about 4 weeks after Franklin Templeton and 9 other issuers launched spot Bitcoin ETFs in the U.S. All right, sticking with ETFs for our main story, CNBC's Bob Pisani is at the Exchange ETF conference in Miami Beach, and he sat down with Matt Hogan, the CIO of Bitwise Asset Management, along with Rick Edelman, founder of the Digital Assets Council of Financial Professionals. The two weighed in on how regulators and investment advisors are thinking about the new investment products.
We're here at the Exchange ETF conference. What's that? 2,200 financial professionals all trying to figure out where's the ETF business going. Good news, business is growing. $8 trillion in ETFs, assets under management. Was $7 trillion a year ago, keeps growing. Here's the tough news. The industry's maturing a little bit, so we've got to figure out new ways to get things going in this business. One of the big ways, Bitcoin ETFs. We want to welcome all the viewers for CNBC's Crypto World. I have 2 big stars here, 2 old friends of mine who know a lot about this business. Matt Hogan, head of Bitwise Bitcoin ETF, he runs that. Of course, with Bitwise as well, and Rick Edelman, head of the Digital Asset Council of Financial Professionals. DAC-FP, as insiders say. I said that a minute ago. Guys, welcome. First off, we want to know, the viewers want to know, there's 10 Bitcoin ETFs that are out there. Are they tracking right? We all want to know, is this tracking Bitcoin properly? It's been 5 weeks now. What's the story?
Absolutely.
And not just yours. I mean,
of course. Yeah, I'd love to talk about the Bitwise product, but more broadly, all of these ETFs launched All of them are tracking properly. All of them are giving investors peace of mind. They're the simplest and most secure way most investors have to access this space. The fees are incredibly low. It's been a huge win for crypto, Bob, but it's also been a huge win for the ETF industry. These have done a great job.
It's been amazing watching the price wars that happened literally over the weekend. I actually had to do stories like on my Trader Talk where, okay, here's the new pricing, and between the time I had the story out in the morning and wrote it the night before, the prices had changed. I got emails saying, Bob, we changed the price. It's not 19, it's 16 now, basis points. So there actually was
Bitwise is the second lowest with only a 1 basis point difference, which is immaterial, and you're waiving the fees for months.
That's right.
And donating 10% of the profits that they generate to charity. So cost is not an issue here.
What are you charging right now?
We're charging just 20 basis points. So that's, to put that in perspective, that's half the fee of the largest gold ETF. It's an extraordinarily low fee, and it's waived for the first 6 months up to $1 billion.
This is BITB.
BITB is our fund. Yeah, it's one of the more liquid funds on the market, one of the largest since launch.
Now tell me about the inflows. From my perspective, I've seen, I think, Grayscale had 26 billion. I think they're down to 20 billion. So there's been 6 billion in outflows, which makes some sense going into the other ones that are out there. But are you attracting more money independent of that? Are there other people investing?
There's net inflows at this point of pushing $3 billion. So the Grayscale outflows have been more than offset from new money, fresh money coming in from individual investors, investment advisors, and institutional investors.
Yeah, and I just build on that. I actually think it's bigger than that $3 billion, because some of the money that came out of the Grayscale product was the FTX bankruptcy. It was hedge funds that were playing a premium arb. If you're thinking about how much new investors are coming into this market, I think the number is closer to 5 or 6 billion. It's the largest ETF launch in history. I think it's a huge success.
And this is really only just the beginning. I'm anticipating that by the time we get to the end of 2025, we're talking 2 years, we're going to see total inflows of more than $150 billion. We're only at 5 right now.
And what is going to propel? That's a big claim. That's a big number. What's going to propel that?
It really isn't all that big when you do the simple arithmetic. Individual investment advisors, independents, those that are operating their own firms, collectively manage around $8 trillion in assets, and 3/4 of them in every industry survey done by DAC-FP as well as by Bitwise all show that 3/4 of advisors say that they're going to allocate to these ETFs, and that their average allocation is going to be about 2.5% of assets. Do the arithmetic. $8 trillion times 77% times 2.5% is $150 billion worth of flows. And that's just independent advisors. It excludes the wirehouses, it excludes the regional broker-dealers, it excludes the institutional investors.
Well, but what's driving people into it? I mean, look, we know people watch Bitcoin primarily because the volatility, and a lot of it's just hope to make some money very, very fast here. You have a very aggressive price on Bitcoin. I think you have 150,000, right, within 2 years on Bitcoin?
Right.
We're at 50 now. We just crossed 50 today, so that's a pretty aggressive number.
It's not nearly
That's
as
what's
aggressive
going to drive
others.
it. I mean, if it's $50,000 2 years from now, those inflows are not going to be nearly
Well,
as strong.
just do the math, Bob. Because Bitcoin's quantity is fixed, the supply is fixed, all of those tens of billions of dollars of inflows, it's a supply-demand issue, classic. So clearly, as the increased demand occurs in a limited supply environment, it can only translate into a rapidly and exponentially higher price.
I would just add that the people who are buying Bitcoin now in an ETF, the financial advisors that Rick is talking about, they're making allocations for the long term. Financial advisors, as you know, are not short-term traders. Right. They're not speculating on where Bitcoin will be next week. They're making an allocation that they plan to hold for a year, 3 years, 5 years, 10 years, that they plan to rebalance like they would stocks and bonds. These are long-term.
Who is buying Bitcoin ETFs right now? I mean, you seem to be assuming it's RIAs.
We're seeing a lot. I mean, I can talk at Bitwise. We're seeing a lot of flows from RIAs. We're seeing flows from family offices. And of course, we're seeing some flows from people rotating out of high fee products into our products. But I think the natural market, the big unlock for Bitcoin ETFs is the financial advisor market. First, RIAs who are independent, and then wirehouses who work for big firms. They need to approve these ETFs, but even that process is going faster than I anticipated.
We thought it would be a year before the wirehouses
Are there any
involved.
wirehouses? Schwab allows it.
Schwab is allowed it.
wirehouse.
Wells Fargo on a limited basis. Morgan Stanley on a limited basis, and this is only going to expand as they grow more comfortable with the product, as asset flows are there, as they become more comfortable with the trading spreads and the accuracy to Bitcoin's price, and as they continue to see client demand. I mean, if they're in the business of collecting assets under management, and if they've got a big pool of investors who want to buy the product, they're going to provide it to them.
And yet, I talk to RIAs here, and I hear some of them say, okay, this is the first real product, a spot Bitcoin ETF that's a true bridge between crypto and the professional financial community. So there's the plus. But then I hear guys saying, Bob, I'm not sure how I can legally recommend this. You know, Gary Gensler took a shot across the bow of the whole industry when he conceded he lost the Grayscale case, but said, may I remind everyone, as a financial advisor, you have Regulation BI, Reg Best Interest, which has suitability requirements. Those are legal terms, basically saying you guys buy Bitcoin for grandma, potentially the investment community, you could get sued by the legal community. How do you protect yourself? There's no standard here. We're in a new business.
And FINRA has also come out with a similar statement cautioning advisors and their firms to behave properly. And that's what Reg BI is all about. You shouldn't be afraid as an advisor from recommending to a client something that is in their best interest. And the SEC and FINRA are both making it clear. Do your job. And if you do that correctly, if you document your recommendation and you ascertain which client it's suitable for and appropriate and in their best interest, and the amount of allocation to the portfolio, and you have the proper disclosures and disclaimers so that the client is making an informed decision, there is really nothing to fear any more than you would any other investment allocation.
So you run the Digital Asset Council of Financial Professionals. This is essentially your job, right? Are you doing seminars for RIAs about this is what you need to do to recommend Bitcoin for grandma? I'm being a little facetious, but you get the point
extensively.
Here.
A big part of our CBDA designation, Certified in Blockchain and Digital Assets, has extensive coursework on regulation and compliance. We do a lot of consulting to brokerage firms and independent RIA firms, teaching their compliance officers how to write the rules and the internal policies, how to train their advisors so that they are compliant safe and they don't have to worry about a regulator coming in asking difficult questions. It is relatively easy, and the new Bitcoin ETFs have made it easier than ever to safely, from a compliance perspective, allocate to this without worrying you're going to run amok or run off the rails for fear of regulatory intervention.
Are you confident that we'll have some path that makes this easy, that there'll be a legal standard that'll evolve here where RIAs aren't going to be terrified they're going to get sued by the legal community?
Absolutely, as Rick mentioned, they're already educating themselves, they're already doing the work, and many of them are already allocating on behalf of clients. A lot of it comes down to right-sizing the portfolio allocation, making sure it's available to the proper set of clients. But you can absolutely do it. You're going to see it from the largest institutions to the smallest. They're going to find a way.
Edelman and Hogan also discussed where Bitcoin ETFs fit into a diversified portfolio and much more. You can find the full conversation over at cnbc.com/Crypto World. Also, Bob's still at the Exchange Conference, and we'll have more conversations about what's next for Bitcoin ETFs over on cnbc.com as well. That's all for Crypto World today. We'll be back again tomorrow, and we'll see you then.